So if you're thinking of purchasing a new home and you're getting ready to make that deposit, you've made an offer, your offer is accepted, you're really excited. There is one thing that you need to be checking on before you send that deposit money in, or you could have a problem. I'm Steve Enchin with Beat Cities Living, and
Good morning. I'm Sasha Travassos with Aramco Mortgage Group.
we're going to talk to you today about probably not the most exciting topic around real estate and mortgage lending, but it is a really important one, certainly lately, and that is insurance, home insurance specifically.
That's right, Steve. You know, as a mortgage lender, usually the most difficult, shall we say, part of the transaction is actually, first of all, getting pre-approved, getting all of your finances in place. However, as a mortgage broker, I'm actually encouraging our clients now to do one step even before we're finished our pre-approval, and that is to make sure they have homeowners insurance.
Yes. So if you've been following the news recently, you probably have heard that State Farm is not writing any more property and casualty or home ownership insurance policies anymore. I think Farmers is also another one. So the worst thing that can happen to you is, as a home buyer, is to go under contract. You get your offer accepted, you send in your deposit, and then you start doing your inspections, and you do your inspection, your appraisal, and then you are getting close to closing, and then you call up your insurance broker and say, hey, I'm moving to a new place, and here's the address, and I just need the policy over there. And then what you hear on the other end of the phone is, oh, sorry, we'll keep your policy on your current home, but you can't get a new policy from this insurance company on your new home. And now you're out of the inspection period. You can't close because mortgage lenders, they would require valid insurance, right?
Exactly. We don't just require valid insurance. You actually, in your closing costs, is 12 months of your insurance premium bundled in, because mortgage lenders will not lend without a 12-month insurance policy already in place before you close. So we just had a hurricane, our very first hurricane in San Diego a couple of weeks ago. And I happened to be in the middle of a transaction for a client of ours. And the insurance company actually told him that, first of all, they were pausing all new policies until the hurricane had passed. And second of all, depending on his zip code, they were actually not going to be writing any more policies that month anyway. So this is in addition, Steve, to those companies like Farmers and State Farm that are leaving the California market. There are vendors such as Allstate who are limiting how many policies they're going to write in California per month. And so if you, for example, open escrow on the first of the month, you really want to be encouraging your clients to get that insurance the next day, or as you said, even before they're sending that EMD check, because they may not even get a policy with a company that is still writing insurance policies in California.
Yeah. And this is super critical up here in the beach cities, because all of our properties are, relatively close to the beach. So they're subject to not so much to wildfires, but certainly adverse weather from storms, storm surges, that kind of thing. So if you're working with a real estate agent shopping for a new home, and this is not one of the most important things on their checklist that they're having you check on before you send in that deposit money, then you got a problem. So this really needs to be top of the list. You need to be really being proactive, I think. So you should be maybe talking to your insurance broker ahead of time and saying, hey, I'm thinking of moving, and I'm thinking of moving to a new home in this zip code. Am I going to have a problem getting a policy? And also they may say, no, we'll write a policy there. Find out how much it's going to cost, because it could be significantly more expensive than what you're paying now. And what could that additional premium do to your mortgage pre-approval?
Exactly. That was actually going to be my next point. Even if you say, well, I've got lots of room, lots of money to pay for a policy. Well, you may think you've got lots of room to pay for a hefty insurance policy, but as everybody knows, your mortgage depends on your debt to income ratios. And that debt to income ratio, the homeowner's insurance is a factor in that calculation. And so if your homeowner's insurance, when I do a pre-approval, we estimate that your insurance is going to be approximately 0.32% of the purchase price of the property. Now, you may have a policy that comes in way higher than that. So instead of $300 a month, your policy is going to cost you $600 a month. Well, that could actually take away purchasing power from you. Instead of having a higher purchase price, you're now having to offset your debt to income ratios with a lower purchase price because your insurance is so high and costly. So yes, you're absolutely right. The cost of it, besides just trying to obtain it, getting it, and the cost of that is another super important factor in this whole transaction.
Yeah, and this hasn't really been on everyone's radar the way it should be. So there have been situations where somebody has left the inspection period, their contingency, they released the contingencies, they assumed, oh, hey, no problem. I've had this insurance policy for, years on my existing home. Should be no problem just getting it on the new home, only to find out that they can't get a policy, or that the policy is so expensive, as you said, well, now the loan can't close because it exceeds the limit. And then they lose the deposit on that new home. Exactly. It becomes a very expensive lesson. So I can't reiterate it enough. This is one of the first phone calls you need to make when you find a home that you're interested in writing an offer on. While your agent is writing that offer, you need to be on the phone with your mortgage, with your insurance broker, asking them, hey, can I get insurance on this property? How much is it going to cost me? And if you get bad news, you need to call that agent and tell them to stop what they're doing and regroup, and then find out what options you have for insurance.
Absolutely. And, there is the California Fair Plan. So those people out there that are maybe living in an area that is a little bit more remote, they know they're susceptible to wildfires, or perhaps right on the coast, susceptible to landslides, mudslides, that sort of thing in inclement weather. There is the California Fair Plan, which is a state created insurance company, shall we say, insurance conglomerate, which is available. But again, not thinking and doing this really in the first couple of days of that escrow opening. It's a government agency. They're not the quickest. They're not going to work as fast as a regular insurance company would. So you could end up having your close of escrow delayed just because you can't get the insurance in time. And Steve, this is very new to our industry. I just really want to iterate that to people. This is not something I've been in the industry 10 plus years, yourself longer. I've never had to deal with this before this year. Have you?
Not in California. It's a relatively new phenomenon in California. Many years ago, I lived in South Florida, and it was fairly common for homeowners to be dropped, and even entire communities and municipalities to be dropped from insurance. But there was insurance of a last resort. There was a state-funded program, very expensive and not really convenient for people to join. But we really don't have an easily accessible and affordable sort of plan B for a lot of homeowners here, because this is a new problem for California. And I think a lot of insurance companies, they've been collecting premiums for many, many, many years, not really paying a lot of claims. And then all of a sudden we have a couple of bad seasons of wildfires and they're running for the hills. And that is a problem for homeowners who may be completely in a different area, that there's zero wildfire risk, maybe even very limited earthquake risk, but they're being negatively affected by these decisions from the insurance companies.
Exactly. Well, I think that's a good kind of roundup of the whole topic. If people want any more information about it, I really suggest, again, going to their realtor, going to their mortgage broker, calling Steve or myself, emailing us tell us more, find out more. We can put you in touch with great insurance brokers and again, I would go with an insurance broker more than a particular agent for one company, because right now that one company may just not have any offerings for you. And so you really want to, like a mortgage broker like myself, I can go ahead and access all the lending products that are out there, not just what one company is offering. And in these unique times, in this unique market, we have to be creative to help our clients get these transactions done and smoothly done.
Exactly. All right. So any questions, you can comment below. Please do leave us a comment, leave us a question. We can have a dialogue conversation here. Obviously, anything confidential about a specific issue that's facing you, please reach out directly. My contact information is right here, coming up on the screen.
And mine is right here.
All right. So thank you for watching. Hope this has been informative and, maybe something you haven't thought of before. You've learned something new. And we will see you again on the next video. Thank you for watching.
Thanks. Have a good day.